Right. There we go. All right, so welcome everybody. Welcome back to the second week of training. It's always very exciting when I see people actually show up again. We didn't scare them off entirely that first week. So thank you for everybody that's here in person. Thank you to everybody that's there online. So just as a reminder to everybody, if you're here in person, make sure you grab your name tent and then please leave it here with me up front when you leave. That way we know who came today and who did not make it here in person with us. Likewise, if you're here remotely, please make sure that your name is your Zoom name so that we can take attendance and make sure we know that you are here as well. So that's one of the things that we track to help measure how effective our training is, and is it much more effective live versus asynchronous and all those kinds of fun things. All right. I'm also going to encourage everybody to have a 4011 and a Form 8843 in person. There are some here. There are also versions out on the website in your reference materials. You can use those as well. For the in-person folks, those 4011s are last year's version. So they have a big X across the front. So you should not be using them in real life, but you are welcome to borrow them for now. Just know that everywhere it says 2024 has to be 2025. And some of the numbers are not correct as well. All right, let's get going here. We're gonna do this, we're gonna do this, we're off. Okay. I'm gonna admit, and we're gonna do hide, and we're good, okay. All right, so let's talk a little bit about agenda for tonight. So we're gonna do a quick update. Moodle reviews will always give you an update as like what's going on. Review what we talked about last week, talk about forms 8843. We're going to meet our first two scenario, our pretend clients, Lisa and Harold. You will come to know them well. Then we're going to talk about income for non-residents and then talk about the Moodle course and homework a little bit, and we'll break and switch to classes. So this hopefully will not be the longest night for the non-resident material. That's probably going to be next week. Tonight is going to be a longer night for resident tax information. So the next 2 weeks are going to be kind of a lot of information that we're going to go through. All right, so let's talk about the course. So looks like most people were able to get in without too much problem. We had about 40% who haven't gone in yet. So I usually send out a reminder email approximately every week. Hey, how's it going? You're not in, or hey, you're all good, or hey, it looks like you're having trouble with this particular assignment or something like that. We'll let you know how it goes. We had 63 people complete the volunteer data quiz. So we've got somewhere in the 120 range of total volunteers right now, which is absolutely fantastic. You can see kind of the breakdown by organization. So the U of M here, NRVTAP is the biggest, followed by Mankato, WSU Hoops, and then App State. And we've got some folks from our other schools hanging in there. So I'm so glad to see you all as we work to try to build those programs at those schools. Everybody answered the information about their languages. That's one of the things that we get measured on by the Minnesota Department of Revenue for our grant. And it was pretty amazing that basically half of you spoke a language in addition to English, which is really cool. I wish I was one of those people, but I am not. And we had 7 volunteers that spoke 3 or more languages. So very exciting. Most folks are doing non-resident. Also, all of the people that haven't told me what they want to do are still in the non-resident bucket, but we do have about a third of the folks that are doing non-resident and resident. So that is super exciting. If it's motivating enough for you, your t-shirt will be yellow when you're a non-resident only, and it'll be blue if you're non-resident and resident. So you can totally choose based on that if you want. The format, pretty evenly split. Most people are pretty good with whatever, even though they may have a preference. We've got a few on the ends doing remote only or in-person only, but generally it seems like most folks are good kind of with whatever is going to work with their schedule, which is fantastic. All right, let's talk about some of the information on the quizzes. So I'm generally not going to go through this in extreme detail when we review things. Just because there can be people watching this later that haven't taken those quizzes, so I don't want to like completely blow it away. But I will talk about a few things. So in John and Max's situation, just taking Max's word for it is not the greatest idea, right? John believes that Max may be lying about this. So he should listen to that experience that he has, that knowledge that he has, but he doesn't have proof, right? So the way that John should address this is do a thorough interview, right? If he knows for sure, if John knows for sure, if Max tells him, oh, these numbers are wrong, or I made up these numbers, then he should not prepare that return, right? That's a violation of the volunteer standards of conduct to actually knowingly prepare a false return. If Max provides information that convinces John, then he can go ahead and prepare it, right? Oh yeah, I really thought that this stock cost $100, but you actually bought it 3 years ago when it was only 25. So sure, those numbers work. Ideally, right, we would have some third-party documentation to support this. That would be the most wonderful way to go about it. But if not, if he has convincing information, that's great, right? If he's not convinced, then he probably shouldn't help. We're going to take our client's word for it when we have a reason to believe them. But if we don't have that reason, if we are suspicious and the client can't provide any supporting information, then, we can say, I'm sorry, you don't have any good information. This isn't consistent with what I know. You're going to need to do that part of it yourself. I can't provide any guidance there. And this is really where John can and should talk to his site coordinator for help, because myself or one of the other people that work as that site coordinator role, right? We've been here at a lot of tax clinics. We've interacted with a lot of clients, and we can kind of help explain it to them in a way that they will hopefully understand and be more accepting of. Let's talk about Joe, right? Joe's the volunteer where he, tried to basically hide that money for the client, said, no, you don't have to worry about reporting that cash income. What should we do with Joe? How can we ever trust Joe again? He deliberately violated the standards of conduct, right? I've sat up here and I've said to you a couple of times, and I'll say it again, right? We must report all income, no matter how the clients get it, right? He is a trained volunteer. He heard that just like you have heard that. He knows that income is cash, his income still. It's income if it's cash or goods or money or a credit card or NFTs, all of that stuff is income. He signed his agreement that he would follow those rules, and now he didn't. So how can we ever be sure that he's not going to violate that again? And so that's why Joe would have to go. So please don't be Joe. I don't think you'll be Joe. I haven't seen any Joes here. We've had some Joe volunteers, but Joe is a hypothetical name, not a particular volunteer's name. So there we go. So for the intake and interview and quality review, the 5 most important words in science and in taxes are pay attention to detail. So it is not 31614, it is 13, I can't even remember the number now, 13416, I think it is, 13614, whatever it is. I switched up the digits on you to see if you were paying attention to that level of detail. Part of why I did it is I know myself, right? When I'm typing numbers in for return, every now and then I will switch the digits accidentally. Just happens to people. Some have, they're dyslexic. Other ones are clumsy just like me, and they do that. So it is very important to start to learn to try to train your eye to catch that level of detail. If you want more reference information on that photo ID question, go to page number 26 in the Pub 5101. Likewise, the quality review team is page 55. Generally, if volunteers answered incorrectly on this one, you guys wanted to have the volunteer there too, which I love. I really like that idea. It's not officially required by the IRS. But if you participate in our pilot here, where we're doing some traditional model tax return preparation, instead of the scenarios for the volunteer readiness check, then you as the volunteer will be involved in the review. So just so you know. And then in terms of the non-resident alien quiz, nothing that really stood out as needing additional explanation. It's just mostly practice and counting on your fingers. All right. Blink and Learn is not available yet. Hopefully, if the government gets back to business, it will be available relatively soon, but my hope is sometime next week. If not then, of course, we're at Thanksgiving, and that's when it'll be available. I don't have any reason to believe that it won't be available in time for us to take the tests. It's just going to be a question of how much in advance they get it up and going. All right. Any questions on that before we move on? All right. Let's do a quick review then from last week. Who's a non-resident alien? Remember, alien is the word the IRS uses for somebody that is not a citizen. A resident alien is taxed the same as a citizen. A non-resident alien is someone who either doesn't have a green card or has not passed the substantial presence test, which is a residency test. This test is done every year, and you count the days in each of the years, all of 2025, a third of the days in 2024, and a sixth of the days in 2023. And if you meet that test, you're a resident for that part of the year that you meet that test, which means you can be a non-resident for the whole year, a resident for the whole year, or this dual status alien, which is you're both for parts of the year, and it's very horrible and complex. And this is an every year thing, right? So you can be a resident and then become a non-resident. Theoretically, you can kind of bounce back and forth a couple times. Not very common. Usually somebody starts as a non-resident, they're that way for a while, they become a resident, and then they leave and they're a non-resident again. But it's possible to have it change. So doing that test is a good thing to do. All right, exempt individuals are exempt from the residency test, not from paying taxes. That is going to be a student on an FJ MRQ visa for the first 5 calendar years that they're in the US, right? It's the first 5 lifetime calendar years that they are here as a teacher, trainee, or student. A teacher or trainee on a J or a Q non-student visa will be exempt if they were not exempt for 2 of those preceding 6 calendar years, which is like a very horrible test to try to explain. And so I always recommend just like writing it out, making that little table up and say, okay, 2025 is the current year, 2024 through 2019 are the prior years. Like, were they here in those years? Were they exempt or not? Were they here in previous years? To figure it out. There's not any good way to do it other than to just build it up that way. And then family members that are here, they're going to be on a -2 visa as well. All right, let's just check the chat. All right, yes, dual status taxpayers are most definitely out of scope, thank goodness, because they are super complicated. We do not want to try to train on that stuff. All right, here is the fancy flow chart that is in the 4011. It's also in, so it's on the online versions, it's in the publication, the printed versions of it that we have. And remember, this is walking you through, are you an exempt individual or do you have to apply the substantial presence test? And if you are an exempt individual, you're going to fill out that form 8843, which basically says, hello, I'm here on a visa. I'm exempt from the substantial presence test. Here's all of my information about that. And we're going to walk through that in more detail here very shortly. All right. That was in 3 minutes what we talked about all of last week. Any questions there? Okay, we're going to keep on rolling then. All right, so, and I think I just said this, but I'll do it again. If you are an exempt individual, you have to file this Form 8843. If you have income subject to tax, you're going to send it with all of your other tax return forms. If you have no income, then you just sign it and send it on its own. You cannot electronically file this form on its own. You have to mail it in to the IRS. This is one of the only forms, maybe the only form, where you don't have to have a social security number or an ITIN number to file it. You can just put your name on it. Students will complete parts 1 and 3. Teachers and trainees will complete parts 1 and 2. Spouses and dependent children also do this form if they're here on that -2 visa. They're going to do the same thing that the primary visa holder does. So if they're a student, like an F2 visa, they're going to do parts 1 and 3. If they are here with a teacher or a trainee or a researcher, they're going to do parts 1 and 2. If you're including it with your tax return, it's going to be due April 15th. Theoretically, it's going to be due June 15th otherwise. That's like the technical when it's due. We're going to tell everybody file by April 15th, right? Because that's when all of our tax clinics generally end, and we don't provide quite as much support. We want to make sure while we have their attention, we get them to send in all of the forms that they need to do. All right. Okay, so if you are here in person, you could have grabbed a Form 8843. They're over there if you would like to get one. If you are online, you're welcome to go pull that up. It's in the reference information section. And these are just the sections of the 8843. So we're going to walk through, like, what do you put in the different places? So name goes at the front, right? First name, first letter of a middle name if you have one. A lot of our clients don't. Then you just leave it blank for a middle. And then last name, taxpayer ID if they have one, right? It's not required. So if they don't have a taxpayer ID, they can leave it blank. But if they do have an ID, we want to put that in there. Then they're going to put, if they're filing it on their own, the address in their home country and their address here in the US. If they're going to file this with a tax return, they can leave those two addresses blank. They don't have to put anything in. But if they're filing an 8843 only, then they need those two addresses as well. Part 1 is general information. So we're going to put the type of visa they had and the date that they entered the US. This is their most recent entry. So if you're familiar with that, when they enter, they're going to have what's called an I-94. It's going to basically say on this date, you came in with this type of visa. It's going to be the last entry up to, I put the wrong date for that, 2025, right? So in this software, 2026 doesn't exist yet. It's only going to be through 2025. So if they went home and they came back in like January 2026, they're going to have to put their entry prior to that, whenever it was, 25, 24, 23, however long ago it was. Did you change your visa without entering? Most people don't do that. If they change their visa, they will leave and come out. But if they did, then they're going to say, yes, they would. Put the name of the new visa, their old visa, and the date that they changed it. Otherwise, it's going to be the same current immigrant visa type from 1A. Countries that they were a citizen of go on line 2. Line 3A, countries that issued their passport, not necessarily the same thing. And then passport number. Line 4A is where the math comes in. We're going to enter the days that they were present here in the US during each of those calendar years. So these days are all of the days that their body was physically here touching the soil in the United States. So flying over the United States in a plane does not count. Not making it past customs does not count. But once they make it past customs and immigration, and they are here, then they are here for that day. And any part of a day counts. So we're going to count the days, 2025, 2024, 2023. And then on line B, the number of days that you can exclude for purposes of the substantial presence test, right? So this is those days that they're here as an F1 visa holder or a J1 visa or J2 or F2 visa holder. If they were here on a non-exempt visa, let's say they were here on like a tourist visa or a visa waiver, those days would count for the number of days they're here for line 4A, right? Because they were physically here, but it would not be included in the days on line 4B, right? Because those are not exempt. Those do have to count for the residency test. So only those F, J, theoretically diplomatic days, all that kind of stuff that would not be counted. Part 2 is for teachers, basically the name and address of where you're teaching or the name and address of the academic program you're participating in. And then enter your visa, if you held one, a J or Q in these years. So it's only J or Q visas, which is really weird because other visas can be important too, but they only want you to put in if it's a J or a Q visa on line number 7. And then on line number 8, were you exempt as a teacher or trainee? This is our test, right? For any part of 2 of the preceding 6 calendar years. Then generally, if you say yes, you cannot exclude days. We have that exception to the exception rule about where the money comes from, where they could still possibly be still excluded. But that is an extremely rare circumstance. That is the exception that they're talking about right there for line number 8. For part 3, this is for students. So we are going to be probably 75, 80% students. So this is what we're going to see the vast majority of the time. Enter the name, address, and telephone number. We need all 3, right? University of Minnesota, 321 South 19th Street, or wherever we are, 651-555-1212, or whatever the phone number is. Same thing for line number 10, but this is going to be a person in the academic or specialized program. So when we think about this, this is who the IRS would call to try to confirm that they were a student here. So it is completely okay to put the professor that's leading their program, the dean of their program, those are all completely fine. However, it is also completely okay, and what we usually recommend that they do is put like the designated school official at the International Student Services office at their school. And the reason why is that those individuals are the ones that help maintain their visa compliance. They maintain their service records with the immigration enforcement agencies. And so they will know if that person is a student here at the university, when they were a student, and when they left. Professors and teachers and deans, unfortunately, right, they do leave. And so somebody that they put down may not still be there. Whereas the general International Student Services office of a school, right, that's not going anywhere. That's always going to be there. They're always going to be able to track down the information for that student. So that's why we recommend the International Student Services Organization if they don't have a strong opinion about it. All right, for line number 11, we're going to put the visa type, FJ, M, or Q that they held during 2019, 2020, and so on and so forth. So if you were looking at this, right, they update this every year to change the years. Last year it was 2018 through 2023. And so they always kind of roll things forward based on those prior 6 years. And then finally, were you exempt as a teacher, trainee, or student for more than 5 calendar years, right? This is that same exemption period. If yes, then there's some additional stuff they would have to do. We are all generally a no. Did you apply for or take affirmative steps to get permanent resident status? Did you get a green card? So entering the green card lottery is not a yes to this question. Winning the green card lottery is a yes to this question, all right, because they would submit the application for a green card. And if that happens, they're going to just say yes, and they're going to write, I won the green card diversity visa lottery, or whatever it's called these days. That's what they would do. All right. The back page is almost not used at all by us, but the most important part at the bottom, if they are filing this on their own, they have to sign and date it. And it has to be like a real pen on paper signature. The IRS is not a believer in electronic anything. And so when you're sending a form into them, they want it to be a real pen on paper signature. I have seen them send back returns saying, this is not an authentic paper signature because somebody like copied the image of their signature and then printed it out with their form. So print it out, sign it and date it, and then send it off. All right, so I am going to do at least one example here, and then you guys are going to be doing 2 examples in Moodle as well. All right, for all of our scenarios that we do, right, we're going to pretend that it's 2026, right? We're in February 2026. We're starting to help students. 2025 is done. They were here the entire time. If they were here, or if not, I will let you know in the scenario information. So you can also assume when we're doing the 8843 forms that the person that we're going to help is going to actually file a tax return. So we don't need to fill out the address information. So that's going to be it for us. All right, I see another chat. All right, okay. Thank you, Adela, appreciate that. All right, let's do it. We're going to stop here. No, we're not. We're going to go right here. Okay, let me introduce you to Lisa. Lisa is our first friend that we're going to help with taxes. Lisa is an F1 student from China. She came here on August 1st, 2023, and then she went home over the summer in 2024. All right, she's studying accounting here at the U of M. This is the address for the International Student Services Group there. Megan is the contact. This is their generic phone number at their main office. Her passport number is the very imaginative 1, 2, 3, 4, 5, 6, 7, 8, 9. I've given you a fake social security number, and her date of birth is, of course, tax day 2004. All right, so let's get started. So the first thing we're going to do is we are going to count days. And I 100% picked her days to try to make life a little bit easier on myself. So for 2003, she was here in August, which has 30 days, right? Because she was here on the 1st, so that day counts. And she was here, wait a minute. August does not have 30 days. August has 31 days. Okay. Then she was here in September, which has 30 days. Then October, then November, and then December. All right, so if we do that, that's 3, 1, 2, 3, 4, 5. So that's going to be 153 days for 2023. All right, 2024 is a little bit more complicated. And I will tell you that you're not going to have to do this math on a regular basis. You're going to do a little bit of it to show that you can do it, but you're not going to have to do it all of the time. And the other thing to know is that when you start doing it, if you use Excel to like make your life easy and do the math for you, which I'm 100% for, make sure you double check the counting formula that you use, because if you do like X minus Y in Excel, it's going to miss one of the days because it's not going to count that first day. So make sure you double check the days. All right, so I did this. So she was here in January, which is 31. She was here in February, which is 29, right? Last year was a leap year, so it's 29 days. There are 366 days. Then she was here January, February, March, April, and May. All right, and then she came back on August 31st. So she was here for 1 day in August, plus 30 days in September, 31 in October, 30 and 31. All right. 10, 11, 12, 13, 14, 15. So that's 3, 6, 9, 12, 15, 18, 20. No, wait a minute. 3, 6, 9, 12, 15, 18, 21, 24, 27. 275 days. All right. And then she was here, it looks like, for all of 2025, which makes our life even better. Super easy. We don't have to worry about counting. 365 days. All right. Does everybody see how I did that? All right. There's a lot of ways to like make it easier on yourself, but that is a quick and dirty way to just count through to figure out the days. So let's do Lisa. All right. We're going to go here. We're going to go here. Form 8843. Okay. So this is what the 8843 form looks like. Oh, let's just go through and fill it out. So Lisa, oops, whoa. Lisa, B, is her name. I said she had a social security number, so we're going to put that in. She is filing a tax return, so we're going to leave the address information blank. All right, so let's get this on back and forth. Okay, so she is an F1 student. Sorry. All right, so she is F1. And the most recent date that she entered the United States was 8/31/2024. So 8/31/2024. And we're going to say F1 here, right? Because she hasn't changed her visa. We just leave that there. She was a citizen of China. China issued her passport. Her passport is that number. All right, 2025 was 365. 2024 was 275. 2023 was 153. All right. And then how many of the days was she here in 2025 on an F visa, right? That's our question that we would ask ourselves, or we would ask Lisa. And the answer is all of them, right? She was here on an F visa the entire time. So in that case, it's very easy. It's going to just be 365 days. Now, Lisa is a student, so we skip part 2 and we go down to part 3. So University of Minnesota, Twin Cities, and then 100% copy that information for the address, right? And then the phone number, 612-626-7100. All right. And it is completely fine that the address and the phone number are the same for both 9 and 10. That is not a problem. So for number 10, we're going to put Megan's name down. Megan is a real person. She is the actual person that you can put for the University of Minnesota. We have contact information for the other schools that we work with. So if you are here volunteering or you're on the phone on Zoom volunteering from another school, we have contact information from your school as well that we will share with you and with all of the students. All right, so what Lisa had in these prior years. So she came in 2023. She wasn't here before then, so all of those other earlier years are going to be blank. We're going to put F there, F there. Was she exempt as a teacher or trainee for more than 5 years? Nope. She has not won the green card lottery. She did not even enter. So we just say no right there. And that's Lisa's form, which I will save. And I will put a copy out on the shared drive for everybody, or not the shared drive, the Moodle course for everybody. All right, Kaylee.
The summer not count as the, what was it? The most recent entry for the date?
Yep. So that's what it is, right? 8/31/2024. Yep. So for a long time, the IRS actually did not really provide very specific instructions. They just said date of entry. And it's like, well, was that like the first in your lifetime entry, or like your first on an F visa, or like your most recent? And so I think it was last year or 2 years ago, they finally clarified that what they want is your most recent entry, like in the tax year or earlier. So not after the tax year, not in 2026, but 2025 or earlier. We always do get some students that'll come to us and say, oh, it's not letting me enter my entry date. That's because they're trying to put a 2026 date. So that is a relatively common, nice and easy thing that we can fix without any major issues. All right. Any other questions about that? All right. I'm going to do one more. Actually, I'm not going to do the whole thing. I'm going to just do the math for him. So Harold is another one of our practice scenarios, right? So he is a PhD student from Norway. He came to the US on January 10th, 2024. He's got a full ride scholarship. They love him there out at Lehigh, and so they gave him lots of money. His passport is this, his social security number is this, his date of birth is also all of this stuff here, all right? So if we're gonna do Harold, so we're gonna need to figure out 2024 days and 2025 days. So he was not present in the United States from January 1st through January 9th, right? So he got here on January 10th. So that is going to be 9 days that he was not here. So easy math, 366 minus 9 equals 357. Am I doing that right? I feel like that's not right, but I think it is. Yes. All right. Okay. So the leap year always messes people up. It's going to mess you guys up. It's going to totally mess up our students. That's okay, right? It just throws everybody for a loop. So you can be happy that you weren't here last year. It was much more common. Okay. All right. Any questions on the 8843 form? All right. So I walked you through an example. I have the scenario. The scenario here is going to be in the presentation, and then I will put the example PDFs. I will do Harold's example, but I'm not going to do it for you right now just to kind of keep us moving here. I will put both of those examples out on the reference material for everybody to see, okay? All right, let's continue on then. Okay, so we're gonna now get into like the actual tax part of federal taxes for non-resident aliens. All right, so as we do this, so I talked about how if you are a US citizen, you are a tax resident, or if you meet the substantial presence test or the green card test, you're a tax resident, right? If you are a non-resident, that means that you're not a US tax resident. So one of the very important questions that we have to determine after we figure out you're not a US resident is, well, where are you a resident of, right? And so when we look at that, we look at where were you living before you came to the US, right? And here we want to look at like your permanent home, not necessarily like a temporary visit for vacation or like a short-term job or something like that. Generally, if your visit is longer, like at least 6 months, you can become a tax resident in that country, especially if it's like an indefinite, I'm there working, and then I just decide to leave. When they do this determination, you can also look at your place of business or employment, right? That's not necessarily so applicable for our international students. Permanent home, where is your family? What is your citizenship? What does your passport say, right? Where can you go and they can't kick you out? Is another way to think about it. If you are not sure or if there are questions about it, there is on the Organization for Economic Cooperation and Development, which is like a UN sort of affiliated organization. They have this very lovely list of all of the excerpts about tax residency from the vast majority of the countries out there. So if you have somebody that says, yeah, well, you know, I'm like a French citizen, but I was living in Morocco for like 3 years, and then I went to school in Norway for a year. You can go parse that if you want to, if they want to figure out, okay, where exactly are they a tax resident of? All right, so let's do a couple of examples. So Lisa here attended a boarding school in France before coming to the US. Her family lived in China. She's got Chinese citizenship and a passport. She always went home to China over the summer. She was only temporarily gone for school, right? I would say that she was a resident of China, right? She did not establish her home in France. She was just there to go to school short term. Harold, that ski bum, he went down to ski in New Zealand for 5 months to enjoy the winter while it was summer up here. However, his family still lives in Norway. He's got a Norway citizenship and passport, right? Again, temporary short-term absence. He was not there for a long time. Final one is Alma. So Alma was originally from Syria, but she and her family left and received asylum in Germany. They've been living there for 2 years before she came here to the US, right? She is a Syrian citizen, has a Syrian passport, but she and her family don't know if or when they will ever return. You know, in that case, because she's received asylum, she's been living in Germany for several years, I would say that her tax residency status is now Germany rather than Syria. All right. Usually it's pretty easy. Usually, where did you live before you came? It's the country of their passport, it's their home. It's not an issue. But every now and then we get some folks that have some very interesting travels in their life, and we get to help them parse it out. Okay. All right, so let's talk about taxes for a couple minutes, right? Taxes are an ongoing experiment, 100 years of social engineering to try to persuade people to do things, right? Get married, have some kids. We'll give you some money off your taxes. Buy a house, go to college. As different groups are in power, right? Different groups will enact tax rules. Usually they don't like get rid of the ones before, they will just modify them or pile them on top. This has resulted in a very complicated tax system, right? Based on all of these things where they want to persuade people to do this or reward people that voted for them by giving them whatever it is they're going to give them. All right. And one of the other parts that makes it very interesting, at least for me, right, is that this means that your individual situation is going to be a direct determiner about how much tax you pay, right? Just because you and I maybe earn the same amount of wages, you might pay a lot less in taxes, or I might pay a lot less, or Elizabeth might pay a lot more here, right? So everybody's situation is unique, which is one of the things that I love most about this is nobody's the same. Everybody is truly special. All right. So here is the general tax equation. And when we get into doing tax returns, the forms are actually structured this way as well. We start with income, right? All the money coming in. We subtract adjustments and deductions and exemptions to get taxable income. We take it times the tax rate to find out how much tax we owe. we subtract our credits, we subtract the amounts that we've already paid, and we find out, is today a happy day and we get a refund, or is today not a happy day and we owe lots of tax? And as we think about this for our non-resident clients, treaties can change everything in this, right? That's one of the best parts about it, is treaties can change all of these things, and we'll talk about all of them and where they kind of factor in. The other part that's maybe not so great is the one big beautiful bill also has changes kind of all throughout this tax law. So it is, I would say, in a lot of ways, like the fundamental pillars of it haven't really changed, but it's basically like you went through and you threw orange paint here and blue paint there, and there's things just look a little bit different, and a few things work a little bit differently than they did in the past. So you will get to see this little orange splatter all over the place when we talk about things that were in particular impacted by the OB3. This is also really important because we still have that problem, right, where our reference materials, the 4011 and the IRS test that we're going to take, those all are based on pre-OB3 law. So although we're going to learn what the proper law is to do all of our returns for our clients, we will use this as a little signifier to say, hey, this actually did change. You might need to double check this when you're using it to make sure that you're getting the right numbers. All right. And so I kind of talked about this, right? We are going to do it properly. We're going to train properly. The tax software that we use is going to be made to prepare correct returns, which is good, right? That's what we really want them to do. All right, but I will do my best to highlight the OB3 law where we understand it, right? One of our challenges is that the government has not provided guidance about a lot of these things. The forms are not finalized, the instructions are not finalized. So it is a work in progress, and we are all going to just have to do our very best to help each other succeed through the challenges that the IRS has issued to us this year. But in particular, I will highlight it during the training. We're also going to highlight it for the test. So if you have a question on the test that asks something about one particular number that says, and it's a number that changed based on the OB3 law, I will tell you, hey, number 13 uses OB3 or pre-OB3 law. So make sure you go do that, right? I'm not going to tell you what the answer is, but I will at least give you that heads up to say, hey, look at the 4011 because that's going to have the right numbers for the test, even if they're not right for our purposes. So that is the plan. All right, there we go. Okay, so let's try to go through a few definitions here. So income, right? Money coming in, or value, things of value coming in, right? It doesn't just have to be money. It doesn't have to be cash. It could be pizza. It could be chocolate chips. It could be, electronic currency. It could be all kinds of things. Adjustments reduce your income based on money that you have spent or saved. So right, if you spend money on the right things or you save money in the right way, the government says, oh, you can take that money off of your taxes. You don't have to pay tax on it. Exemptions reduce your income based on people. They're all set at 0 right now. Deductions reduce your income as well. The standard deduction reduces your income by a set amount. And for non-residents, only students from India can take this. Students and business apprentices, technically. But teachers, researchers, professors, all of those cannot do it. It's only the students from India that can do it. And then everybody else has to itemize their deductions, which basically, again, reduces your income based on money that you've spent on particular things. All right, the tax rate is the amount of tax that you pay. It's progressive, so think of it as like a layer cake. Your first amount of income, you're going to pay 10%. Then this next range, you're going to pay 12, and then 22, and then 24, and it just kind of goes up from there. Credits are fantastic. Credits reduce your tax. So you calculate how much tax you owe, and credits, rather than taking off your income, they actually take off the tax. Some credits will only take your tax down to 0. Those are called non-refundable. Other ones, they will actually give you money back. Even if you don't owe anything, even if you never paid in any money, you will still get money back as a refund. And those are refundable tax credits, and those are everybody's favorite credits. Withholding is money that gets taken out of your income and sent to the tax authorities by the people that gave you the money. So if you work here at the University of Minnesota and you earn wages every 2 weeks, they send you a check. They won't give you the full amount, right? They're going to take some money and they're going to send it to the IRS. They're going to take some money, they're going to send it to the Minnesota Department of Revenue. But you didn't send that money, right? They took it out and they sent it off with you not ever even getting it. On the other hand, if you know that you're going to have to pay, you can send money too. And sometimes our clients need to do this. We'll talk about situations where that is. And that is called estimated payments. So I know that I'm going to owe tax. I'm going to estimate how much it is. And I'm going to say, okay, fine. I'm going to owe you like $500. Here's 200 now, right? I'll pay the rest later. And if you paid too much, you'll get the extra back. That is a refund. All right, so treaty provisions are generally going to be in IRS publication 901, and they basically override tax law to either make some income not taxable at all or to tax it at a lower rate or a different rate. The publication has summaries of the provisions. The 4011 has like the really, really high level version of it as well. So the next thing I'm going to do is I'm going to walk through I'm going to walk about scope and then we're going to go for it. So scope, super important for us because, right, unfortunately, I would love to help everybody, but we cannot do that. The IRS puts limits on us based on what we can do. Some of those things are based on a person's like individual situation, like when they were here in the US and when they were not, which would make them a dual status alien. There are some types of income that are also out of scope for us, like cryptocurrency or driving for Uber, things like that. So as we talk about those things, I will identify those in red, right? Because the IRS says we can't help with those. Sometimes the software has limitations and we will also identify those as red, right? The software just doesn't work. So for example, our regular software last year had an income limit of $84,000. Your income was above that, it just would not give you forms. Of course, it would let you put everything in, but it wouldn't actually give you the forms. And there was nothing that we could do to fix that. Sometimes when we talk about things, you're going to need a dual certification. This is why we love folks that have said they would do advanced, because some things need both the non-resident and the advanced certification. And we'll put those items in green. We also put limits here on what we do just based on the desire to support our target population and the limitations of where we are and what we can do. And in those cases, we'll always identify those things as blue. Our general criteria that we use as our limit, our first limit, is that people must have a school, nonprofit, or government email account for help. And the reason why we do this is that the organizations that sponsor F and J visa holders are generally schools, nonprofits, and governments. That's where we came up with that. There are many VITA sites that support general individuals out there based on location and income, and we send people there all of the time. I'm sorry, we only help if you have a school, nonprofit, or government email address. Here's where you can find a local VITA site. They help people based on income and location. Hopefully they can help you where we are not going to be able to do that. The hard part for us is that the software doesn't necessarily, other than those times like that 84,000, the software won't keep us coloring within the lines. So the software is perfectly happy to report on cryptocurrency capital gains, right? So if the clients know what they're doing, they can enter all of that information in. And we can tell them the software handles it, and here's the IRS website about what to do, but we can't tell you what to do, which is kind of feels very artificial, but that's kind of the limitations on the program. And it's really because of the complexity of it and to make sure that we can train to make sure that the tax returns we support are going to be correct. All right, so let's talk a few more things about income, right? So when we look at income for non-residents, the very important question we have to ask is, where does that money come from? So for non-residents, foreign source income is generally going to be not taxable. This is going to be things like gifts from parents, wages from a job worked in their home country, scholarships from home governments or organizations, foreign source income, which would be really rare and out of scope. But generally, if it comes from outside the United States, we do not care about it. It doesn't go on a tax return. We say, congratulations, well done. We're not going to worry about it. However, we do have to report all US income tax, right? Don't be a Joe, we have to report all of it, no matter what type of income it is. All right, the next topic or concept is the idea of being effectively connected versus not effectively connected. Basically, the government treats or taxes the income differently based on if it's associated with your purpose here in the United States or not. So the quote trade or business, right, of our clients is that they are here as students, right? They're here to learn, or they're here to teach, or they're here to do research, right? So income that is connected to that is going to be effectively connected. So that is things like wages and scholarships from organizations here in the US, right? It is not going to be effectively connected if it is things like investment income, right? You do not have to actually trade in stocks to get a degree in business from a university. You might want to do that, and you might make some good money on it, perhaps. I hope you do, but that is not connected to your purpose of being a student here in the United States. Same thing for like royalties, other types of interest or pensions, or things like gambling winnings. For not effectively connected income, that is generally taxed at 30%. So it is a pretty good chunk out of it. There can occasionally be a few treaty benefits, but mostly it's 30%, and we'll talk about that. The one exemption we have in this is bank interest. So bank interest is not taxable for our non-resident clients. So if they have a savings account and they get a bunch of interest, not as great as it used to be, but they can still get a decent amount and they will not have to pay any tax. The bonuses that you get for opening up a bank account, those are usually treated as interest as well. So we will definitely see some students come through that says, oh, I have this, form from Chase Bank that says I got, $100 of interest as a bonus for opening an account. That is generally going to be reported as interest income, and it's not going to be taxable. If they are doing investment income, that is interest income, that is taxable, but otherwise it's not taxable, and there's not even a spot to put it on the form. So they don't even need to include it. All right, when we talk about wages, right? So you're working for an organization as an employee. The source of that is based on where you are when you do the work. So if you are here in the US as a student working, it doesn't matter where the organization is that you are doing the work for, whether it's a US, educational institution or a company back at home, right? If you're here doing that work that is US source wages, you're going to pay US taxes on it. If you go back home and you work in your home country, that is not going to be taxable wages. Probably you might have to pay taxes in your home country, but we're not trained on that. We don't know. That's completely out of our scope. Somebody that works as an employee here in the US, they will receive what's called a W-2 form that shows how much money did they earn in that calendar year. And generally, most employers are pretty good about doing this. There can be some special exclusions, but we generally don't see those. Now we start to get into the fun stuff. So one of the changes for the OB3 law is there is this no tax on tips thing. But it's really not no tax on tips. It's actually a reduced tax on tips. Basically, you don't have to pay tax on the first $25,000 of tip income that you receive. If you get more than that, then you would pay tax on it, right? This is generally, I think, only, again, this is where we're getting more information, right? There are a bunch of professions where tipping is expected. The government has provided a list of those, and those would kind of automatically qualify. If you are not working in one of those professions, the IRS may or may not be quite as willing to accept the idea of you receiving any significant income of tips there. You have to have a social security number. If your income is too high, you're not going to get it, but we aren't going to see anybody with income like that. Married filing separately does not qualify for this. So all of our married non-resident aliens, they're not going to be able to file a joint return together. They will not be able to get this. So on the W-2 form, right, they say, here's your wages that you earned, and here's how much tax that you've already paid. They did not update the forms to try to collect the information about the eligible tips, because there are a few things like it only counts as a tip if the person paying you had the option of paying you. If it's one of those mandatory service charge tips, then that doesn't count towards the money that you can count for tips because there was not an option to pay it. It was mandatory. There's nothing on the forms, the W-2, well, there's a couple of places on the W-2 where you can see tip information. Sometimes it's rolled into box number 1 with all of your other wages. There can also be information on box number 7 as well. Hopefully there will be additional guidance from the IRS about how we are supposed to handle and report this. Because right now it is kind of a black box as far as what information employers are going to provide to their employees, and then how we're going to translate that into the tax returns. So we'll figure out what needs to be done there, but that is a new factor, a new part of the new OB3 law. The general response to the IRS for any kind of a new thing, right? Oh, we're going to give you money on this, we want you to do that. Let's create a form for it or a schedule for it, right? And so they have a new Schedule 1A that includes all of these new little provisions. And this is what the one for no tax on tips look like. So we're not going to be manually filling this in, right? The software is going to do a lot of it. We're going to just have to help the clients figure out what that number should be. And then we will understand where to put it into the software. And it's going to do the math in terms of adding this all up and doing the subtractions and all of that kind of good stuff. But that's where it's going to live. Likewise, there is a new fabulous no tax on overtime law as a part of the OB3, which is really not a no tax, it's a reduced tax. Basically, the income tax is waived up to $12,500 of overtime. The fun parts about this one, right? So overtime, time and a half usually, right? It's only that half piece that gets the reduced tax. It's not the time and a half piece. It's not double time or whatever, it's only the half time. In addition, the only overtime that meets the Fair Labor Standards Act requirements qualifies for this, which is you worked for more than 40 hours in a week. So some states have different rules, right? California has, I think, if you work more than 8 hours in a day, you start to get overtime, even if you don't work more than 40 hours in a week. Other people can have alternative work schedules, right? My schedule might be that I only work 35 hours a week. So if I work 38 hours a week, I get 3 hours of overtime, which is like great for me because I get some extra money, but that wouldn't qualify for this no tax on overtime or reduced tax on overtime requirements. Same kinds of things about not everybody's going to qualify for it. And once again, we have the same thing where like the W-2 form is not updated to say how much of eligible overtime did you receive so that we can put that into the right spot in the tax software. So we will probably, for those that it applies for, be trying to help them figure this out. I am very hopeful that the employers will provide appropriate guidance for that. This will also probably be one where we may have to have some discussions with our clients, right? If you're telling me that you earned over the course of the entire year $5,000 in wages and $12,250 in overtime, I would probably say, wow, that's really, really interesting. I don't know, how did you work that many hours to like more than double your regular wages with overtime, right? So more to come. Every VITA program out there is working to try to figure this stuff out for their clients. All right. But once again, it's going to be on this schedule 1A. We're going to have whatever the magic number is. It's going to go in here. There'll be a little bit of math. Software will do that part for us, right? We're going to just need to know where to put it in the software and then how to help our clients figure out what the right number is. If we're lucky, right, most international students can only work 20 hours a week on campus. So hypothetically, they should not really have overtime. So I am very hopeful that, at least for the overtime one, it's going to be a moot point and we'll almost never see it. The tip one, I don't know. We'll find out. I don't think a lot of the jobs on campus would be tipped. We'll find out. So, all right. Yes.
For on-campus jobs, they do time and a half for like holidays, like if you work over Thanksgiving break, does that qualify as overtime for that?
I don't think that that would, right? Because if this is based on the Fair Labor Standards Act, which is 40 hours in a week, it doesn't matter what day it is. As far as I know, right? I'm like, we're all still figuring this out, you know, and the IRS is really, they haven't provided any of the instructions or anything like that. So I can't give you a definitive answer, but I think no. All right. All right. Oh, but I see somebody else raised their hand. If you want to, Jason, do you want to talk? What's your question?
Yes, I actually so I wonder if for Starbucks you like employees receive some like tips. I wonder if that
Yes.
person is like an international student, would they get the tips?
Yes, I mean, I think they would. I mean, number one, if they earned the tips, they should receive the tips in income. And
Okay.
then, yes, they would probably, that would qualify them to get that. So yeah,
Sounds good. Thank you.
sounds terrible. Thank you for bringing that up. No, trying to kidding, but yeah, it's gonna be complicated, right? We'll have to figure out how it goes. I think next year it's gonna be great, right? Because they will get those income documents updated. All of the payroll companies will update all of their systems so that they can report on it, and it will all flow relatively smoothly, right? This is just going to be a transition year. It's going to be rough. We're all going to do our very best to help everybody prepare correct tax returns. It's all we can do. All right, so we're going to move on to another type of income, which is called self-employment income. Basically, this is income when you have your own business, right? Or at least the people that are paying you treat you as having your own business. So things like Uber or Lyft, some internships get treated as independent contractors. You know, starting your own business on Etsy, something like that, those would all count as independent contractor income. So you earn income by performing services or selling goods. If you have expenses, qualified expenses, you can subtract those from the income that you receive and you only pay tax on that net amount. If you're doing that work here in the US, that's generally going to be taxable here in the US. If they are self-employed, they're working for like a Uber or Lyft or an internship, they're going to generally receive a Form 1099 NEC. This is the one it is. I believe that this year it's still 6,000. I'm seeing some 600 in front of me. Contradictory information. I think it is still 600. I think it's going to change next year, but this year at least is 600. If they get less money than that, they won't get a form that reports it, but they still have to report that income, right? Doesn't matter if they earned $50 or 500 or 5,000, they still have to report that income. Unfortunately for us, self-employment income is out of scope for non-resident clients. It is in scope for residents. So those of you that are doing the advanced test, it is in scope for kind of simple businesses. There are quite a lot of situations where it's out of scope, but it is in scope for a lot of kind of very basic businesses. So we can talk about that a little bit more. There are some really good resources online for like record keeping and acceptable business expenses and how to figure that out. So anybody that we have that is in this situation, we can kind of point them to those and say, we can't really help you on this piece of it, but here's a bunch of information that's going to help you figure it out and get it reported properly. All right. So you can sometimes, if you're from the right country, not include in your income or exclude based on a treaty, wages or self-employment income. So from a treaty terminology perspective, when they say independent personal services, that means self-employment income, right? You're independent, you're on your own, you're doing your own thing. Dependent personal services are wages, as are compensation during training. That is also wages. The treaty provisions can vary based on who's giving them the money, right? Is it somebody from their home country? Is it somebody in the US? Is it an educational organization in the US? All of those things can matter. Now, the ability to claim a treaty is not based on providing forms to whoever gave you the money. It's when you fill out your tax return forms, that's when you actually claim the treaty. But you can tell who's giving you the money in advance. Hey, I'm special. I have this treaty. Here's my form 8233. It's going to tell you the details about that so that you can get special tax treatment up front that's going to match your treaty benefit. The advantage of that, let's say it is a researcher from China, right? They have a super cool deal. All the income that they earn working as a researcher, they don't have to pay any tax on. Sure, they could pay tax up front and then file a refund or filing it a refund back for all of it. But that adds up over the course of a year. So it's a lot nicer just to never have to pay that tax up front. And so they are an example of somebody that would benefit from doing this 8233 form. All right. So I'm going to show you what a treaty looks like. This is and how we go from the treaty documents to the 4011, which is what we're going to use in the vast majority of our tax events. So how to read and interpret things. All right, so this is an example. This is what it actually says in the treaty agreement that was ratified between the government of the United States and the government of Norway. Article 16 of that treaty says, students and trainees, it is horrible, right? An individual who is a resident of one contracting state at the time he becomes temporarily present in the other contracting state, and who is temporarily present in that other contracting state for the primary purpose of studying at a university, blah, 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 so on and so forth, shall be exempt from tax by that other contracting state with respect to the amounts below, so on and so forth, right? So it is horrible to try to read through this. Now, as you get through the tax season, you may end up going back to a few of these if you have questions. But if you do, the easiest way is to start first by saying, let's not look at this contracting state and the other contracting state. Let's put names in there. Somebody who's a resident of Norway, when they come to the US, they're here in the US to go to school at a US educational institution, is exempt from tax by the US, so on and so forth. So it talks about that, right? And then the 901 summarizes this, right? It says, oh yes, the individual who's a resident of Norway, when they come to the US, so on and so forth, they don't have to pay tax on, income from personal services for up to $2,000 per year. This individual is entitled to this benefit of this exemption for a maximum of 5 years. So if we go back, it says that, where does it say that here? So here, if we go to this section thing B right here, it says, for a period not exceeding 5 taxable years from the date of arrival. But here, it just says 5 years, right? It doesn't actually include all of the detail. And now if we go to the 901 table, right, it's even less. Compensation during training, 5 years, $2,000 per annum. That's all it says. And then it's got the treaty thing. And then on our 4011, it just is down to as minimum information. Norway, 5, 2000, 16.1, right? So if you only looked at this, you would never know that this actually begins from the moment that they arrive, those 5 years. So it's not like they get to choose which 5 years apply. So they say, oh, well, I wasn't working for my first 2 years, so I didn't want to count the treaty then. Well, the treaty only counts from when you first started or first arrived. All right. Okay, I have a question. So it is 6:45, basically. We've been going for about an hour and 15 minutes. Would you guys like to take a break? Or do you want to try to keep going? Usually I try to go till we get to the resident stuff. So we've probably got another 15, 20 minutes. Is everybody good with Getting that out? Okay. All right. You that are out there in the remote Zoom world, you can feel free to mute us, pause us, and take care of things and come back as you need to. All right. So we're going to try to get through this here. Like I said, this is a long night. So W-2 form, right? This is the form that they send this to report on it, right? And they just say, like, here's our wages, tips, and other compensation, social security tips. We'll get into that if we need to. But this basically is the official report of how much money that person earned. The people that gave you the money, they send it to you and they send it to the IRS. You use it when you file your forms. The IRS compares the two documents to make sure everybody is saying the same thing. And then they say, sure, okay, we agree with that. Here you go. Here's your refund back. All right. There's a 1042-S document, which has the very fancy words, names, foreign persons, U.S. source income subject to withholding. Basically, this is generally going to be income that gets special treatment, right? So treaty exempt income, it can be taxable scholarships, whether they're treaty exempt or not. It can be interest, it can be dividends, it can be capital gains, but by far our common ones are wages and scholarships that we see a lot of with this. All right, this is kind of a compare and contrast, right? W-2 is income from working as an employee. 1042-S may be a treaty, maybe a different kind of income. There are different withholding forms. There are different ways of calculating how much tax to take out. Sometimes it's zero, sometimes it's like a set rate. Other times, like with the W-2 and the W-4 withholding, it's a reference table. And they say, oh, well, you get paid every 2 weeks and your paycheck was like within this range, so we're going to take out this amount as an estimate of how much tax you're going to owe. W-2s will usually also have state income tax as well. State income tax is almost never withheld. It looks like, I think California schools may do that a little bit, but otherwise I haven't ever really seen that happen. You can have FICA taxes, so Social Security and Medicare taxes withheld. For a 1042-S, those taxes are never taken out as well. All right. So on a 1042-S, box number 1 is going to have a code that says the person that gave you the money says this is what kind of income it is. It could be something like a code 16, which is a scholarship or fellowship grant, a code 19, which is compensation for teaching or researching, or a code 20, compensation during studying or training. And there are other codes as well, but those are, again, are the most common ones that we receive. And one important thing to note, right, is that somebody that is here, so let's imagine a PhD student. They are here, they are getting their PhD, they're studying, but they also are working part-time, right? They are helping as a teaching assistant. Their purpose here is to be a student. So if they get a treaty exemption, it's going to be under code 20 for compensation during studying and training. Their purpose here is not to be a teacher or a researcher. Their purpose is to study and to get their degree. So it's going to be under that code versus the code 19. And the 4011 tables are here. I think that the paper ones that you guys have, they're slightly, I think they're like 16 to 18 instead of 15 to 17, but they're in that same area of the 4011. All right, let's talk about some fabulous treaties. So I love this first one. It's completely terrible. So basically, for people from these 6 countries, as a teacher or researcher, they come here, all of the income that they receive, no matter how much it is, they don't have to pay tax on any of it. However, if they stay even one day into that 3rd year, their tax treaty is retroactively eliminated, right? It's like it basically it never existed. It's gone. Like it was never even there in the first place. And they will owe tax on the entire visit. And those 6 countries are India, Luxembourg, Netherlands, Thailand, Pakistan, and the UK. And we see people in this situation, right? And so if we have somebody like this, we're going to ask, hey, that's great. You're here. You're wonderful. There's this great treaty. Are you going to be here more than 2 years? Because if you are, you're going to pay tax on everything, and you might as well pay tax now. Don't claim that treaty. If you know you're going to leave, yes, let's take that treaty, get all of that money that's taken out back. But know that if you stay into that third day or third year, even just one day, it all goes away and you have to pay tax on everything. The next one is Canada. Canada is kind of an all or nothing state. Basically, if you earn less than $10,000 in wages, you don't have to pay any tax on it. If you earn more than $10,000, you have to pay tax on everything. So for whatever reason, they set that hard limit. Anything below is awesome, great news. Anything above, terrible news, you pay tax on everything. Germany, they have a treaty benefit that's retroactively eliminated for students. Their period is 4 years. So generally, most students from Germany don't take the treaty because it almost always takes more than 4 calendar years for them to get their degree. So they are here longer than that. China has a fabulous treaty that $5,000 of exemption for personal income continues even after they become residents, as long as they are students, which is super cool. And then teachers and scholars get a 3rd year in addition to the normal 2 for the no tax on their income. So they have some really cool deals. All right. I'm going to jump through these for now. Actually, I'm not going to jump through these. These are important. Let's do it. We're going to talk about it. Oh, Roberto is a J1 student, non-resident, who came into the US from Italy. He earned $9,500 as a teaching assistant. So how are his wages going to be treated on his tax return? I'm going to grab a 4011. Left here. So the good news is that the treaty benefits and all of those things haven't really changed. So that at least is not all covered with the little orange splodge. All right, so let's go here. So Roberto is a student. I am going to the 4011, going to page 17, 18 for the people that have a paper copy here. All right, so he's a J1 student from Italy. If I look at that, there is no Italy listed on the countries with treaty benefits for studying and training. So that means that he is going to pay tax on all of his income, right? He is a student, even though he's working as a teaching assistant because that's part of his responsibility. His purpose here is to be a student. So he is not going to be using the treaty benefits for teaching and research, which there is one from Italy. So if he's figured that out, he's going to be asking about why that does or does not apply. Rhonda is here. She's an F1 student from Poland. She got $9,500 in wages, right? So they both earned the same amount, but she is from Poland. So if I look at that, I find Poland here. So she gets $2,000 that she doesn't have to pay any taxes on. So she earned $9,500. She doesn't pay tax on $2,000. So she is going to be paying tax on $7,500 of her wages. All right. And Reggie. So Reggie is a student from Canada. So Canada isn't in the treaty benefits for students for studying and training table. It's actually the page before all of those tables. So page 14 or 15, depending on whether you're looking at the paper copies or not. When we see the US-Canada income treaty, it talks about basically exempts all earned income if you've earned not more than $10,000 in the tax year. So Reggie earned $9,500. So Reggie is going to owe 0 taxes, right? So we've had 3 students that came to us, right? They might be in the same department working the exact same job. They earned the same amount, but they all have very different answers, right? One is paying tax on $9,500 of income, one on $7,500, and one on 0, right? Lucky Reggie, he chose a good country to be from. All right. So let's talk about Frederick here. So this one I'm going to let you guys answer. So he is on a J1 visa. He is here to do teaching and research. So he came as a researcher. He is going to stay 3 years and he's paid $45,000 per year. How is his income going to be treated on his tax return? Is it going to be taxable? We can do thumbs up. We can do thumbs up in here, or treaty exempt. You can do jazz hands. If anybody wants to join from online, find the 4011, find the page. I would look on the page for treaty benefits for teaching and researching, right? That is why he is here. He's not here to get a degree. Do we see Germany on the list? Yes, we do. All right, so he came from Germany in 2024. Right, and if I look at this, so the Germany treaty says for a maximum of 2 years, no limit on the amount of money, he doesn't have to pay any tax, right? So Frederick doesn't have to pay any tax on his income this year, right? He's got a pretty good deal. Now, next year is going to be his 3rd year. Next year, he is going to have to pay tax on it because his treaty only applies for 2 years. But for now, at least, life is good for Frederick. All right. Mary, same exact situation, right? She came here on a J1 visa, except she is from the United Kingdom, right? She's came here in 2024. She's going to stay 3 years. She is also paid $45,000. What do you guys think? Is it going to be taxable? Should it be taxable? Thumbs up. Treaty exempt? Jazz hands. Anybody want to give me a sign? What do you think? I'm going to be stubborn. I'm going to make somebody give me some sort of a sign. Thumbs up, meaning you think it's taxable. Treaty exempt, meaning it's not, or hands, applause. All right. Oh, I see catches. Okay, that's all good. Yep. Yes. So for, I don't know which one you're talking about, Jeff, but for poor Mary, right? She is one of those fabulous 6 countries. The United Kingdom is one of those ones where that is a retroactive treaty benefit. So if she's going to stay for 3 years, and that is what her plan is, she's going to pay tax on all of it. It's going to be fully taxable. So she and poor Frederick, all right, are in very different situations, even though on the surface of it, right, they're all international students here, or teachers here, but it's very different. All right, let's talk about Ed. Ed is here as a J1 non-resident. He's doing a postdoc work, so he's a researcher as well. He gets $12,000 in wages. Is his income going to be taxable on a US tax return? What do we think? Jeff, I'll come back to you in just 2 seconds, okay? Anybody want to give me a sign? Thumbs up, we think we has to pay tax on it. Treaty exempt. Yes, that's right. Yep, I see some thumbs and that is exactly right. Here, because he's from Canada, right? It's that magic $10,000 number where below that, he doesn't have to pay any tax. Above that, he is all good. All right. I see a chat message. Or a chat message. Okay. All right. Perfect. Thanks, Jeff. Okay. Let's keep going here. Prior refunds. Okay. So the idea is when the federal government is like the tiniest, like the nicest they could be, the smallest way they could be nice, they are doing it. So when you itemize your deductions, one of the possible deductions means that you can subtract the amount you have to pay in state income tax. So the money that you pay to the state government, you don't have to pay federal tax on that. Woohoo, you don't have to pay tax on the money you pay on tax. That's really nice of them. However, if you get a refund on some of that money, then you didn't actually pay that money in tax, right? You got it back. And so that refund amount does get counted as taxable income the following year when that refund comes back to you. A lot of states don't have state income tax. All of our friends out in Washington don't do that, so we don't have to worry about it from them. Pennsylvania has a flat tax, so it's super easy, but almost nobody gets a refund, which is like very fabulous. And Minnesota changed their rules back in 2020 about this. So since then, we don't see a lot of people with refunds. So this is not very common, but it does happen. Here's kind of an example to show you how it works, right? So on your prior year return, you had total wages of $10,000. You itemized for the amount of money that you had taken out for federal or Minnesota tax. So your taxable income was $950, right? Or $950. You had $500 taken out for Minnesota state tax. Then you filed your Minnesota return. You had tax on your wages of $10,000. The tax calculation was $400 in tax. So you got a $100 refund. Of that $500 that you paid, you got $100 back. So that's basically like you didn't actually pay $500, right? You really only paid $400. So now you're going to have to pay federal tax on that $100. This only applies to people that itemize. If you use the standard deduction, you don't have to include your state tax refund the following year. Because in that case, you took the standard deduction. It was a set amount. Your state income tax that you paid did not reduce the amount of tax you owe. So it's basically only in the situations where your federal income tax reduces your tax that you owe. All right. Okay, let's talk about scholarships and fellowships. So we see this a lot, right? Where everybody's going to school, it's very expensive. Some of the ways that can help people afford it is they get a scholarship or a fellowship. And there are three possible tax treatments for scholarships and fellowships. It can be excludable under the Internal Revenue Code, means it's not included in your income. If you have one of these, that's your only income, you don't have to file a tax return. Doesn't get reported anywhere. It can be excludable, it can be exempted by tax treaty, or it can be taxable. Remember, this is only for scholarship money that comes from the US. So the source of scholarships is where the people that gave the money are located. So if it's the University of Minnesota, it is US income, it is Minnesota state income. If it is an organization out in New York, it's going to be US income, New York income. Even if you went to school in Minnesota, if the organization that gave you the money is in New York, that would be New York source income. All right. So to be excluded to meet this thing, it's called a qualified scholarship. The student has to be a candidate for degrees. They have to be a payment for tuition, books, or supplies that are required. So they must be mandatory supplies. It can't be optional things. We get a lot of questions. Oh, well, I bought a laptop computer to go to school. Yes, even though from a practical perspective, you kind of need a computer to go to school, because it's not required, like as an item listed for either enrollment or as an item listed on the syllabus of your class. Unless it's on something like that, it's not going to meet the requirements from the IRS to count as a qualified expense. If they get one of those, it'll get reported on the tax return. I don't know that I'm saying this right. Basically, the schools will generally report the taxable scholarship amounts on a 1042-S form. They won't report the 1042-S form amounts for qualified scholarships. So if you get a scholarship and some of it goes for tuition and there's a little bit left over that they give you in money, they will do all of the math to say, we're going to subtract all of the qualified expenses first, and we're only going to report to you the taxable amount on a 1042-S. So students can go through their student accounts if they think something is wrong, but usually schools are pretty good about doing that math. All right, there are a bunch of countries that have treaty benefits for scholarship and fellowship grants. Those are going to be in our publication 4011, page 15 or 16. That's got to be from somebody that's here in the US or an organization in the US. It cannot represent payment for services, right? It's got to be a non-service fellowship. So, if you have to get up every day and go show up at the lab, that is generally going to be considered wages rather than a scholarship or a fellowship. All right. Everything else is going to be taxable. When we look at the 4011 for these things, for the treaty benefits for scholarships and fellowships, you'll see that most of them say 5 years, but there are a couple that have an unlimited number of years. There's one that has a 2-year limit as well. On the dollar amounts, all of them almost are all unlimited, but there is one, the Commonwealth of Independent States. So those are the former Soviet republics. So Armenia, Azerbaijan, Belarus, Georgia, Kyrgyzstan, Moldova, Tajikistan, Turkmenistan, and Uzbekistan. Those ones have a different provision. Basically, they say up to $10,000, but only for ordinary and reasonable living expenses. So let's say that the University of Minnesota says, Kenneth, we love you. We love you so much. We're going to give you a scholarship. We're going to pay for all your tuition. We're going to give you $20,000 a year. And if you are from any one of these other countries, you can say, yes, that's great. And you know what I'm going to do? I'm going to go to Australia for a month in the middle of the winter because I can't handle this cold. Totally fine from a tax perspective, right? Maybe not so good from a university perspective, but from a tax perspective, it's totally fine if you spend that money on something else, unless you're from the Commonwealth of Independent States. And they're the ones where only food, rent, clothing, kind of reasonable living expenses count, and only up to that $10,000 limit. All right. I am going to jump through these because we are getting low on time. I'm going to hit on interest, dividends, and capital gains, right? So these are the things that are not effectively connected to being a student, right? You don't have to get dividends. You don't have to get capital gains to be a student or a teacher or a researcher here in the US. Dividends are an amount that the company gives you as an owner, a shareholder. They say, our company made lots of money. Here's a little bit of it because we love you as an owner. Capital gains are when you own an asset and then you sell it. If you sell it for more than you bought it, you have a gain. If you sell it for less, then you have a loss. Capital gains require both the advanced and the foreign student certification, are the two ones there. Bank interest is generally going to be not included or excluded from a tax return. Otherwise, if it is any kind of an investment interest, then it would be included. All of those not effectively connected income types of income go on what's called a Schedule NEC, which is a separate form where they have, like this, generally a 30% tax rate. Treaty benefits for dividends, there are a few, but they are out of scope. They're actually not very common. Treaty benefits for capital gains are theoretically in scope, and you're certified for that level. The treaty benefits are also listed here in the 4011. It is not very common that we have students with capital gains. You know, it definitely has become a little bit more common with the advent of organizations like Robinhood that make it really easy for students to trade. But prior to that, it was very rare. And even now, it's not very common. But we do see some. So it is important, if we can, to have some volunteers that can support them. I'm going to skip through these. I'm going to skip through that. It's an example of how to interpret the treaty. And let's stop here. Questions about income? It is a lot. It is a lot. All right. I will say that, right, when we look at our students, right, the people that we typically help, wages and scholarship are the common types of income that we see. Some get treaties, some don't, but that is usually kind of the extent of what we see. We don't see a lot of other types of situations. We're going to talk about a lot more of those in the resident tests, resident section here. But even with the residents, right? Again, students, teachers, researchers, we still see commonly just a few types of income. We don't see a lot of other types, which is very different than a lot of typical VITA sites. Okay. All right, we are going to break, but it's not going to be back. Actually, we're not going to break. We're going to jump ahead to do like 2 slides about Moodle, and then we're going to break. Sorry, we're almost done. Okay, reminder, do the Moodle stuff. If you haven't done the volunteer data thing, do the volunteer data survey. Do the first quizzes, right? It's really important, right? You are building your tax muscles so that you can be strong and practice and pass that IRS test. We want you to be able to do it, but I can't lift those buckets for you. So when Link and Learn goes live, I will let everybody know, but for now, it's going to probably be a big no. If you haven't already, you've got 4 modules to complete for last week. You will have 2 new modules. The first one is Form 8843. You're going to do 2 practice Form 8843s. Then you're going to do a quiz on income and treaties for non-resident aliens. All right. So a couple words on the assignments, right? So you're going to be filling out forms as part of the Moodle homework. We're going to do it here. We're going to do it next week. We're going to do it all through the spring, right? So you will generally have a couple of scenarios to do. A minor mistake, right? Like you say, oh, they were like put an F1 instead of a J1 or something like that, right? That's going to be a minor mistake, usually like 5 points off or something like that. A bigger mistake will be 10 points off, right? You do the math wrong for the calculations, or you enter the numbers backwards, like I sometimes do, right? If you make a really fundamental mistake, like missing a form or something that could get you kicked out for violating the volunteer standards of conduct, that's going to be 25% or more off, all right? I kind of follow that same, generally 80% is a pass. You're going to get 2 tries to do it. So when you submit the forms, right, I will go through them. I will like circle the things that are wrong if there's anything that's wrong. I will tell you about, okay, you know, you put this here, but we need to have this, or you didn't include this. So I will talk you through what is going on, ask you to correct the form, right? But we set up Moodle so that you can't just like pound through everything really quickly. You do the first scenario, you send it to me, I grade it, I give you feedback, you fix it, hopefully it's all good, then we move on. The reason why we do that, right, is that you miss things, right? Everybody misses things the first few times that they do it. It's no problem. But if you jump through all of these scenarios really quickly, all you're going to do is submit 2, 3, 4 scenarios that have all of the same mistakes. So this is a way to help make sure that you catch those mistakes and that you start preparing the forms correctly, which will be less work for you in the long run, even though it does mean that it takes a little bit longer. So you can't just do it in 1 hour and expect it all to be done. All right. One other thing on PDF software. So you're going to use IRS forms. The IRS creates these as fillable PDFs, but they don't always work with all versions of PDF software. Some of them have issues with like text font, that doesn't show up in the right places or it's not readable. Occasionally I've had like hugely inflated file sizes with them. So I'm going to request, please just use Adobe Acrobat Reader for filling out the forms. That's one of the software versions that the PDF or the IRS tests to, so we know that it works. And that is the end. All right, we're going to take a break till 7:15. Thank you to everybody that stuck with us. If you are leaving here in person, please bring up your name pens and put it up here so we can keep track of who left. And we will be back in just a little tiny bit. Yeah.